Hello and welcome to Gradient's weekly roundup of key business and financial developments in Sri Lanka for the week ending 1st April 2022. I'm Nishani Figuera. Here are the top stories for this week. Inflation in rapid rise. IMF warns of Sri Lanka's solvency issues. Power cuts extended, CPC tells motorists not to queue up. Exports surpass $1 billion for the 9th consecutive month. Tourist arrivals steadily increased, flights to India doubled. We will also briefly look at other notable news that made it across to our news desk and wrap up with the capital markets update. In our main story this week, inflation as measured by the Colombo Consumer Price Index continued to rise to record levels. March inflation as measured by the Colombo Consumer Price Index rose significantly to 18.7% in March from 15.1% a month earlier. Food inflation increased to a staggering 30.2% year-on-year from 25.7% in February, and prices of the non-food group grew to 13.4% from 11% from a month earlier. Rising food inflation is due to supply constraints from the now rescinded chemical fertilizer ban, higher global food prices, import restrictions, as well as the removal of maximum retail price on many essential items. The International Monetary Fund's Article 4 consultation report on Sri Lanka noted that the country faces a solvency problem as a fiscal consolidation necessary to bring down debt to safe levels would require excessive adjustment over the coming years. It stated that a credible and coherent strategy to restore stability is required and that the debt overhang as well as persistent fiscal and balance of payment shortfalls would constrain growth and jeopardize macroeconomic stability in the near and medium term. It added that a rollover risk of the debt is very high and that foreign currency denominated debt servicing requires access to significantly large amounts of external financing at concessional rates and long maturities over many years. In response, the Central Bank of Sri Lanka stated that with the Sri Lankan government indicating an engagement with the IMF, the bank stands ready to cooperate in such an arrangement. Power cuts and gas shortages persisted in the country for the 6th week, with electricity interruptions extended to 13 hours from Thursday. Despite credit lines and loans from India, China and Bangladesh, supplies are constrained as the country faces an unprecedented foreign exchange crisis. The Ceylon Petroleum Corporation requested the public not to queue up at filling stations for diesel on 30th and 31st of March as a ship carrying 37,500 metric tons of diesel was unable to unload. According to the SLTDA, 101,192 tourists arrived in the country in the 29 days of March, increasing the cumulative figure for the year to over 280,000. India was the main source market, followed by the UK, Germany and Russia. Sri Lankan Airlines announced that it was temporarily stopping its Colombo-Moscow route, citing high insurance rates as a result of the conflict. Further, the airline added that it would double the number of weekly flights to India to 88, matching the pre-pandemic level. Meanwhile, international regional flights recommenced at the Ratmalana airport after a lapse of 55 years. Daily FT reports that the development project cost 220 million rupees. Moreover, tourist earnings for the first 2 months of the year were revised down to $322 million from $583 million. This follows SLTDA adjusting average daily tourist spend to $175.8 from $215.8 and average duration of stay to 10.23 days from 15.1 days. In other news this week, according to the Export Development Board, Sri Lanka's merchandise exports grew 9.9% in February 2022 from a year earlier to $1.05 billion. This is the 9th consecutive month that exports have crossed the billion-dollar mark. Among the main categories were apparel and textiles, which increased 12% year-on-year to $494.8 million, offsetting the fall in tea exports, which declined 10.4% to $100.9 million. Export earnings from rubber and rubber finished products increased by 11.3% to $93.2 million. Coconut-based products exports increased to $67.9 million, up 12.4%. The United States and the United Kingdom remain Sri Lanka's main export destinations, accounting for approximately 29% and 8% shares respectively. Sri Lanka's gross domestic product grew 3.7% year-on-year in 2021, albeit from a low base effect of 2020, which saw a 3.6% contraction in the economy. Industrial sector rose 5.3%, followed by services sector and agriculture sector increasing 3% and 2% year-on-year respectively. Industrial sector growth was driven by manufacture of apparel textiles and the manufacture of F&B, while IT programming and telecommunication subsectors contributed primarily to the services sector. And now let's take a look at the weekly movement of the All Share Price Index and the S&P SL 20 Index at the Colombo Stock Exchange. Here's how the rupee performed against the dollar this week. In other market news, in a welcome move, amendments to the Inland Revenue Act are to include an extension of the 50% tax concession for companies going public at the Colombo Stock Exchange between 1st and 31st January 2022. This was mentioned by IRD Commissioner General HMWC Bandara to the Sunday Morning Business. The Colombo Stock Exchange, in association with the Securities and Exchange Commission and the Sri Lanka High Commission in the UK, organised an investor forum in London, United Kingdom, to attract foreign portfolios and direct investments. Around 60 fund managers and investors were slated to attend the forum. And that's a wrap for this week. Follow us on LinkedIn and YouTube for more updates on business and financial developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.